Well, HDFC Bank, India's largest private sector bank, declared its Q3 FY22 numbers over the weekend. And of course, brokerages have come out with their views and reports. Let's take a quick stock of how they assess the results as well as what they see as the upside on HDFC Bank. Well, Credit Suisse first. It believes that it has maintained its outperform rating on the bank and has given it a price target of 1950 rupees a share. It believes that the growth recovery and benign asset quality will continue to drive up the ROEs for the bank. It believes that strong top line and favorable growth outlook does give a good runway for the bank. It believes that NIM for HDFC Bank is well positioned and will deliver a healthy earnings going forward. And lastly, they've tweaked their FY22 to 24 EPS expectations, adjusting it for the better credit or the lower credit costs that have come through in this quarter, thereby giving it a buy. Now, the credit costs have come down from 1.3% in Q2 of FY22 to 0.94% in this particular quarter. So, good set of commentary coming in from Credit Suisse. Moving on to Macquarie. Macquarie also has given it an outperform rating with a target price of 2005 a share. It believes that the ROAs for the bank are close to an all-time high, 2.3% is what it's come at. And it believes that a sound balance sheet and good asset quality should help the bank, aid the bank going forward with regard to its growth. Of course, PPOP growth has been weaker than what Macquarie expected, but it believes that they're not worried about this weak growth. And HDFC Bank continues to be their top pick in the sector. Moving on to CLSA. CLSA also has a buy rating on HDFC Bank with a target price of 2025 a share. It believes that asset quality was a beat and that should not be a concern anymore. It also believes that while the core fees had a small miss in terms of their expectations, it believes that the growth rebound has been strong and NII PPOP will follow suit. It also believes that HDFC Bank is currently trading 6 to 7% lower than its historical average, so a buying opportunity there as well. And it also opines that the commentary of the bank has been strong, especially with regard to growth as well as with regard to retail and commercial growth. Moving on to Motilal. Motilal also has a buy on HDFC Bank with a target price of 2000 rupees a share. It believes that earnings were pretty much in line. Balance sheet has strengthened further and the bank has witnessed a healthy pickup in business loans. It believes that there is going to be a 20% PAT compounding over the FY22 to 24 period, and the ROA and the ROEs are going to be in the 2.1 and 18% broad range for FY24. Of course, there has been a strong performance from subsidiaries as well. Broadly, pretty much research houses believing that it's going to be in the range of 1950 to 2050 is what the target price is for pretty much all the research houses. A strong 25 to almost 30 to 33% upside from current market prices for HDFC Bank.